Right, so welcome back. If you got this far to the fourth video, you're probably able to put up with the older Norfolk monotone voice, and hopefully you're learning a little. Obviously, this isn't my full strategy. This is just a guide into how somebody who comes from a non-mathematical or economic background can start to dictate the market a little bit. Obviously, it's not financial advice, but with a little bit of common sense, you're able to find an edge in the market and build some patterns. So what we've got up at the moment, we've got our current chart that I showed you that I built in the previous video. And as I explained before, we're using two moving averages, the SMA 50 and the 200. And what I did was I played with moving averages because I found that they were too long. So it's great for a long-term market condition, but I wanted to know what the condition was here and there. So I started playing with moving averages, and I come up after lots of playing with a short-term, mid-term, and long-term market direction. And quite a few people that I've taught have said, actually, Paddy, you can build it into a script. I no idea how to build a script at this point. So it got turned into a traffic light system. I actually use a different version of this, but this is the one that people that I taught in our free community have created. So in a nutshell, if all three were green, we'd only be looking for buy trades, and if all three were red, we'd only be looking for sell trades. That gives you a real edge, right? It's going to make you right more times than you're wrong if you start following this kind of procedure. And it seems so obvious, but when you come from a background of following signals, you haven't got a clue. So this is really like my main tool in my armor is I can dictate and I can go, right, well, all three aren't aligned. I'm not even going to check my chart today. Or I'm not going to check it this morning. Or I'm not going to check it for the next hour. But when all three are aligned, I'm going to start looking for opportunities. So I'm going to take you back to this one here. And this is Tuesday 28th of April 2026 at 5 a.m. And all it is it's a 1 hour full candle has opened up here and closed down here. Now I've not got it on replay mode because I think that's a bit of a con when you see people promoting videos on replay mode, but all three were red at the time. And what happens is I basically take a sell here at 4,632, and my take profit is down here at 4,547. That's a thousand pip move. At £10 a pip, that's a 10,000 pound trade. And you can see that it activated on Tuesday 28th of April at 6 a.m. and it hit take profit on Wednesday the 29th of April at lunchtime. That all looks well and good, and there was a similar trade that I took in this position. This is just a quick draft of the chart. But how many of you watching this could be here, and if you were trading this at £10 a pip, you've entered here at 4632. By the time you've got down to here, so it's 1, 2, 3, 4, 5. So 6 hours later, at 11 a.m., you look at your account and it's £3,000 in profit. You're going to close it, aren't you? Let's be honest. And I found that I was hitting more take profits by closing earlier because my mentality state had changed from treating take profits as gospel and just saying that I'm happy with what I've got. I was up with a dog at 5 a.m. I saw an opportunity. I took it. I let it play out. I checked at 11 and I'm £3,000 up. That's in the bank. Right? I'm going to get what, £2,400 of that after the profit split with my prop firm. That would take me 2 weeks on a building site to earn that sort of money. Now, it doesn't mean you're going to get one of those trades every hour. But what that will then start to do is that will start to give you opportunities on here. And then by the time it reverses back up to here, you tend to find that the traffic light's out of sync So you've already cashed out. You've already cashed out. And you're like, well, hang on, this is quite simple. Then you come down to this position here and you see this trade and you think, great, we're on for the next target. But your traffic lights aren't all aligned. And this is when mentality starts playing a big part. So I found it really simple to start looking at structure being zoned out, and you can see patterns building. And what really benefited me was this traffic light system. It took me out of the equation with silly times when the market's all over the place and can't make its mind up. So I found that a really helpful tool to keep me consistent. And at this point, I'm then at the point where I'm only taking 15, 20 trades a month. But those trades running at £10 a pip, they're then running at like anywhere from like £300-400 profit to £1,200 profit. And that's when things really started to escalate. I was still on the building site at the time. I was still building houses, but because of the time of the candle I'm trading, it's able to allow me to really be able to satisfy my curve and my appetite and my teaching so far to trade, but also to carry on working and bring in my monthly income from my business. So everything that I'm earning from trading is just investment money. The trick is to stay consistent and invest wisely. However, at this point, I was still having the odd loss here and there. And don't get me wrong, it wasn't really being noticed in what I was earning every 14 days from my payouts and from my brokerage. But what it was doing was the odd loss here and there was affecting this up here. So in the next video, we'll go over about how to deal with losses, how I found a way to get over the losses, and a few more ways to implement not trading, staying out of the market. So if you're enjoying this so far, if you wouldn't mind subscribing and liking the video, or even leaving a comment, there's a link to our general chat group. You can hop in there, you can speak to people that I've taught before, and just generally chat trading. So yeah, so thanks for watching.